I'm Chris Hill here with Tim Hanson. Stock of the day is Tesla Motors, falling a little bit today. We saw a pretty big fall yesterday in the wake of this internet video that showed up. A car in Seattle, one of the Model S.
Pretty cool video.
It was a pretty cool video. Maybe not so much if you're a Tesla shareholder, but this Model S hit some large metallic object and caught on fire. What do you think?
Well, you know, this is an example. I mean, the stock was down. I guess it got downgraded yesterday.
Got downgraded.
And then this YouTube video hit, and the thing was sort of selling off all day. I guess it's selling off more today. You know, this is an example of a stock that I think has become disconnected from the fundamentals of the business. When a downgrade and a video of a car on fire can cause it to drop, I don't know, 10, 15% now. You know, interesting things about Tesla. I saw an interesting chart the other day that showed that institutional shareholder of Tesla has declined to only about 60%, which means that retail shareholders now make up a lot of the investor base. And I think that's what, and you know, it's got a very active Yahoo message board. You know, Kramer called it a cult stock the other day, and I think that, you know, when you get involved in something like that, where the business and the stock become disconnected, and there are a lot of forces pushing on it, you're going to get a lot of volatility.
Backing away from Tesla for just a second, we've talked about this before, the whole notion of headline risk. You look at a company like Boeing in the headlines for the Dreamline battery fires, and that stock has done really well. Do you like headline risk?
Yeah, generally speaking, headlines make a bigger deal out of something than the actual event is in terms of like the long-term value creation story for a company. You know, in the case of Tesla, however, the stock at this point is so expensive, in my view, that you're not being. I mean, the stock would have to fall dramatically to get me interested in it. You know, I think, you know, the way I've looked at Tesla is I've basically turned it into Porsche over the next 5 years, and that only gets you a stock price of like $60, $70. So people are very optimistic about Tesla. You know, and if it weren't so expensive, an event like this would probably be a buying opportunity, but I think the valuation's gotten so out of control that it's best to just sort of watch it from the sidelines.
You mentioned the downgrade. The downgrade yesterday from the analyst was from a buy to a hold. Do you think that's where the stock is right now? If you're a shareholder, you already own the stock. Not necessarily this internet video is not reason to run out and sell it, but it's not time to buy.
I think we all know that hold on Wall Street is a euphemism for sell, because they don't have the gumption to actually come out and say sell on anything on the sell side. So you know, the fact that institutional shareholders have been dumping stock, there's a dilutive event coming on the horizon. It's very expensive. I would say, if you're a Tesla shareholder, you've had a great run. I'd probably look at, you know, if you've got long-term capital gains and not short-term, I'd probably think about lightening up.
All right, that's our stock of the day for Thursday. We'll see you tomorrow.